Crypto or stocks, which will make you rich? The pros, cons, and keys to smart investing. Have you ever had a fantasy of being wealthy overnight? Have you ever imagined waking up to find your small investment has grown into a mountain of cash? So pay attention, because we're about to get into a heated discussion about whether you should invest in stocks or cryptocurrency to ensure your financial independence. I'll tell it to you how it is. We'll expose the unpalatable facts about both markets so you can make wise investments and raise your chances of winning big. Cryptocurrency beckons with the promise of enormous gains, returns that may turn $100 into $100,000 or more. But it's also well known for being hazardous and temperamental. While stocks offer more stability, getting rich could take some time. So, which route do you take? We've crunched the statistics and examined the fundamentals you need to lock in wise selections, so don't worry. You'll learn which industries have the biggest upside potential, as well as how to identify winners and stay clear of landmines that could destroy your portfolio. We'll outline the benefits, drawbacks, and insider tips you should be aware of before parting with your money. Take use of this superior information to create wealth that exceeds your wildest dreams. Keep reading, because these sizzling recommendations can be your path to the luxurious lifestyle you've always wanted. Let's get going. Here are some examples of advantages and disadvantages of buying cryptocurrencies as opposed to stocks. Pros of cryptocurrencies. The potential for rapid gains. The value of cryptocurrencies can swiftly see large increases. Cryptocurrency markets are open round the clock. Accessibility. There are few restrictions on who can invest in cryptocurrencies. Anonymity. Setting up a crypto wallet doesn't require any personal information. Cons of cryptocurrencies. Extreme volatility. Prices may drop drastically, causing significant losses. Lack of regulation. Greater opportunity for fraud and deception. Cryptocurrencies are still in their infancy and may not succeed. Security risks. Digital wallets can be stolen and accounts can be hacked. Stocks benefits. More established. The stock market has existed for many years. Government regulation offers transparency and protection for investors. Less volatility. Stock prices are often more steady. Dividend payments. A lot of equities offer consistent income. Stocks negatives. Slower growth. The average annual return on the stock market is 7%. Trading only during exchange hours. No 24/7 trading like cryptocurrency. Higher entry barriers. There are more requirements to open a brokerage account. Less anonymity. Your true identity is linked to your stocks. If you want me to elaborate on any of these advantages or disadvantages, let me know. Here are some potential insider trading tactics for equities and cryptocurrencies. Cryptographic methods. Dollar cost average. Consistently invest little sums over time to lower volatility risk. Realize returns by selling a piece of your investment when it experiences significant increases. Set a threshold to sell if the price falls below a specific level by using stop-loss orders. Put an emphasis on holding crypto assets for a long time. Look for cryptocurrencies with practical applications. Investing techniques. Invest in what you understand. Look for stocks in sectors or categories that you are familiar with. Use dividend payments to buy more shares and compound returns by reinvesting dividends. Examine financial indicators to appraise stocks, such as PE ratios and earnings reports. Diversify. To reduce risk, spread your investments over a variety of stocks and industries. Use dollar cost averaging to smooth out market dips by consistently investing small sums. Place orders to buy or sell at a chosen optimal price point by using limit orders. Thorough study, close market monitoring, and a disciplined investing approach based on your objectives are the keys. Please let me know if you require further explanation or have any other inquiries. Here are some pointers for finding possible winners in stocks and cryptocurrencies and avoiding traps. Crypto. Do your research on the use case. Meme coins with no real-world utility have an advantage. Monitor development activity. Upgrades and active development demonstrate continued dedication. Keep an eye on social media buzz. Growing talk on platforms like Reddit can indicate expansion. Watch out for get-rich-quick sensations. Often, promises of returns that appear too good to be true are. Stocks. Examine your company's financial situation. Strong businesses show increase in revenue, profits, and debt. Research competitive advantage. Winners possess a benefit that losers struggle to match. Monitor insider transactions. If insiders are purchasing the stock, that is a bullish sign. Identify market leaders. Leading businesses in expanding industries frequently triumph. Avoid hype and hysteria. Refrain from getting caught up in fleeting manias surrounding a stock. Be aware of assets with dubious histories or dubious promoters making strong statements in both cases. And never invest more than you can afford to lose properly. Do your research and avoid the hype in favor of quality. Here are some pointers for telling the difference between stock market fads and real growth. Consider the fundamentals. Is the company's financial situation solid and does it have a long-term business plan, or is the buzz the only factor generating momentum? Take into account the catalyst. Does the increase in demand appear to have developed at random, or is it being driven by a specific news item or event? Consider the duration. Prolonged growth shows real value, but spikes based on transient manias are more likely to be transient. Examine trading volume. Unusual high volumes may indicate bandwagon hopping rather than strong conviction buying. Keep an eye out for insider selling. Excessive selling by insiders and executives may indicate that the stock is overpriced. Be wary of extremes. Stocks with unrealistic valuations are warning signs for mania-driven surges. Examine analyst consensus, as opposed to hype-driven surges. Real growth typically receives support from analysts. The trick is to avoid being carried away by the emotion and enthusiasm. Examine the stock's qualities and the factors causing the frenzy with objectivity. This will assist in determining whether it has merit or is simply an unsustainable increase in demand.